So this week we actually have quite a few things on the watch list. Now, there's not anything structurally different in my view, in terms of huge market movers. We've still got tariffs. We've still got obviously inflation data that's playing a role with all central banks, as it always does. So it's more a case now of how are we going to trade around it. So if you remember the last or the previous week and the week before that, one of the big topics we were discussing was trade tensions and the German fiscal stimulus of 500 billion euros. Now, those things, as far as I'm aware and as far as I can see, are totally priced in. So if we just head over and have a look at euro dollar here. Now, the I've seen a lot of arguments for bullish euro dollar, bearish euro dollar. And to be honest, I see it both ways. And that's because I am pretty much neutral on Eurodollar, which in turn, in the current market situation, leads me to actually being a little bit more bearish. Phantom, you've not missed anything, my friend. We've only just started. So yeah, the direction on Eurodollar, I would say now is to the downside. Now, I'm not saying that parity is coming. You know, I was talking about parity quite a lot at the end of last year, the start of this year. I don't see that coming anymore. The situation at the moment now with euro dollar specifically, the euro obviously benefited from a less restrictive policy from the ECB. It benefited heavily from the German fiscal stimulus, which were both big drivers of the euro, causing upside pressure. Simultaneously, we had the dollar falling essentially off a cliff. It wasn't a small drop. It was quite aggressive and it was quite quick. So we've got to take that into account, but those things are done. So some of you who are active in the Discord will know I talk quite a lot about the efficient market theory, and I talk about markets pricing things in very quickly. Now, those two things are exactly the same. Essentially, if you don't know quickly what the efficient market theory is, it basically means the markets are efficient. So as soon as there is information, as soon as there's guidance, as soon as something happens, the market has priced it in or is currently pricing it in. And obviously, when I say market, I mean market participants, people that have more money than we do, people that have more resources than we do, people that can go quicker than we can. So, keeping that in mind, again, all of this was driven by three factors: weak dollar, German stimulus, and the ECB less restrictive policy. That's been the case for the past week. Not had any developments. We had the FOMC, but the FOMC wasn't really much of interest, to be perfectly honest. It didn't really tell me too much, but we'll go into FOMC shortly. So the path of least resistance, or the easiest path for Eurodollar now, is downside. Now, again, it's not driven by necessarily fundamentals. This move, I would expect, is driven purely by a lack of data or a lack of drivers in this market now. We still have this left side move here to see some sort of correction. It's very normal for markets to come back and correct very aggressive moves. You see it all the time with news. So if you go ahead and have a look at things like NFP, and we have a really strong candle either way, normally, maybe in an hour, maybe in 2 hours, maybe the next day, we will see some sort of correction, generally speaking. So that's the idea on Eurodollar. I personally won't be taking any trades on this one. The reason I'm covering it is because I know a lot of people trade it. I know a lot of our members trade it, so it's useful to cover. This position I've got marked up was by my fund partner that I run a fund with, so it's not my position. Don't worry, I didn't skimp out on you and the signals. But yeah, personally, it's not for me. I need a macro driver. So silver. This is, of course, one I called on Friday. This trade looks beautiful, if I say so myself. We're still very bullish. I want to say we, obviously, I mean elite traders, me, and the team. Still very bullish on the commodities, the precious metals. So the difference between gold and silver, there's not a huge difference really. The main thing is that they're used very slightly differently. So gold and silver are both used as safe havens. So we will see appreciation in risk off moves, which has been great for silver. But the main appeal for silver, or sorry, one of the other appeals for silver is its industrial side. So it's used in a lot of things, cars, phones, general construction, all those types of things in industries. So we've got industrial demand. We've got China slightly implemented there, but I'm not actually going to go into China in this web. That might be a separate video at some point. But we're mainly talking about the market sentiment of risk off. Just because, sorry, the reason I'm focusing on silver specifically is because of the technicals. I'm still very bullish on gold. In fact, I might be even slightly more bullish on gold. And I'm just going to sidetrack very slightly here. I do apologize, but I want to show you this just while it's on my mind. Gold here, retail is currently 90% short, and this is very, very typical. It's very normal. It's the recipe for losses. The market moves up, people sell. When actually the market moves up, you should be looking to buy. It's very obvious, don't be the guy trying to sell the top is what I'm trying to say. And I think it's a great example here. So we see overall gold is reading very, very bullish. You can see the economic indicators down here, very bullish. The only thing that's not really actually is CPI, PMI services. Even seasonality is bullish, but yeah, retail is very heavily short at the moment. And it's a very similar case for silver. So silver is also very bullish. Retail is, actually, I think retail's slightly less short on silver, but it is what it is. So as for the technicals, it's the same as what we did last time. So we did take a position on gold, but my technical entries, my setup doesn't change. It's the fib. So what we've got is very simple, oversold RSI. Now, obviously, this market didn't move really because I called it Friday night. But yeah, RSI oversold. We've come down almost as 200 moving average. We've got the fib. This lines up with previous structure. It's rinse and repeat, same old, same old. You should be aware of this by now if you are in the Discord. Um, Now, the slight thing with silver is I'm actually looking to hold this one for a little bit longer. So my game plan this month has been essentially just cutting profits. It's taking money wherever I can from the markets. I'm not looking to do anything complex. I'm not looking to hold on to 1 to 10 trades or anything crazy. Just looking for 1 to 1s, 1 to 2s at most, getting out, securing profit, moving on. Whereas silver, I think has a lot more potential to continue running. I don't see anything standing in the way. We've still got problems in the markets now. As I was saying, we've got things priced in, but it still weighs. We've still got money getting allocated to precious metals, and we've still got the central banks. So we've got Russian and Chinese central banks still cashing in, or sorry, still increasing their gold reserves, which obviously will relate more to gold than silver. Now, the S&P, so again, this was actually by my fund trader, but I'm looking to take one as well as a signal for the Discord. I think we might have bottomed on the S&P now. We don't seem to be making lower lows, which is obviously a great thing. So we've come down. It was actually, was it 10%? Let me just double check. Yes, almost a perfect 10% pullback. So the general rule for pullbacks in equities indices, so the S&P, Nasdaq, Dow, is a 10% pullback without any necessary reason. So obviously we did have trade wars, which was a huge impact here. But without anything such as a recession or a global financial crisis, without a real core problem in the global economics, a 10% pullback is essentially just a buy signal. And that's again, it's a general rule you can follow. But again, you've got to be keyed in. So if you've got a situation like COVID, maybe not the right idea. So we've come down to the 50 EMA on the weekly. We've got institutions buying quite heavily into the S&P. So let me just pull up the institutional positioning here. I know last week they bought into it, so I just need to double check I'm actually getting my facts right here before I go on too far. Yes, so we can see they sold off slightly. And then net change went from, sorry, 0.41 up to 5.08. It went down a little bit to 3.82, and it went here negative 1.4. Sorry, negative 0.14. However, the idea is still there. We're still overall bullish. Now, what I'm trying to get at here is if we were in a situation where we were on the brink of recession, there was a huge market crash looming, do you think institutions would still be net long on the S&P, or do you think they would be trying to make as much money as possible, as they always do, off crisis, which it would mean in turn selling the S&P? Well, they're not doing that. So obviously there's something there. There's some reason they're buying it, and I'm happy to buy it again. 10% correction is a buy signal as long as there's nothing drastically going on with the world. US dollar yen. This is another signal we've got going on. There's not much to cover here. I'm still very bearish on US dollar yen. The problem is the dollar has had some pullback here. I'm going to go into the dollar slightly in a moment. I still think the foundations are bearish for yen pairs, so bullish for the yen. The problem is the Bank of Japan held their rates, which was fine. That was very expected. However, they didn't seem eager to hike rates. It actually seemed relatively relatively dovish, which wasn't what I wanted to hear, but it's fine. The long-term view is still there because Japan's inflation is still elevated. They don't really have any choice other than to hike rates at some point. So it might be a case of we get stopped out of some yen pairs here and there. Eventually, we will get there and we will make some money off the yen. It's just a case of waiting now, as far as I'm concerned. So for the dollar. I am expecting a pullback to the upside, which again could be beneficial for things like the euro dollar pullback we were talking about earlier. And the reason I'm looking at some sort of pullback on the dollar is more technical. So we've had a very, very simple pullback here. And again, from a technical basis, this looks like a great buying opportunity. However, the data isn't long dollar. So I'm definitely not going to be positioning long dollar for a long period of time. Might look for some sort of day trade, some intraday positions, but definitely not swings. So what I'm looking at here is a short-term pullback. So we've broken out of this sideways range on the dollar. We might be coming up here into a 50% pullback, then a continuation to the downside, which is what I would ideally want to see. But we can but wait. There's nothing else to do. But the main thing here is we have broken out this sideways range, so it would make sense for the dollar to pull back. Again, as I was saying at the start of the webinar, when we have very aggressive moves like we see here on the left, they do generally get corrected at some point. It can take a long time. It can be instant. It's just a matter of time. So yeah, that's the situation I'm looking at on the dollar. Long term bearish, short term we might see some pullback, but nothing crazy, I would imagine. Onto the watch list, what we've got coming this week, we do have the DAX. And I think the DAX is actually my favorite setup, and I think I'll be looking to take this one, possibly London session tomorrow. By the way, I saw there's a message in the chat. I will get to the messages shortly. Don't worry, I'm not going to ignore you all. So with the DAX, I'm just going to read my notes here. German macro is stabilizing. GDP just beat. Manufacturing is recovering. Then 500 billion euro fiscal stimulus package is a game changer for domestic demand. CPI is softening. So CPI is a measurement of inflation. When we have inflation cooling, it means that we are looking towards having rate cuts. When we have, oh, that's a terrible arrow. When we have high inflation, we're looking at rate hikes. So inflation up, inflation down, rates down. That's a general rule. Obviously, there's a lot more components to it, but it's something to keep in mind. It's a general way you should think of it. So with inflation, it does tell us we could be seeing some rate cuts continue by the ECB, although they're on a less restrictive policy. I think it's still very, very fair to say we are going to see rate cuts into the rest of 2025 at some point. Following the general trend on the DAX, again, my personal rule is never sell the equities, the indices. I just don't see it as a worthwhile risk to take. So in a situation like this, where we're having a pullback, the only thing I'm doing is waiting for a buying opportunity. I'm not looking to sell. Now, again, the setup doesn't change. We've got the fib, we've got the RSI oversold. We've come down almost into the 200 moving average. Not quite, but it's fine. So yeah, this is essentially a perfect technical setup. It's just a case of seeing how it plays out in London. Oh, well, sorry, I say London. We'll take it London towards sort of early morning tomorrow, and then we'll see how it develops for the rest of the week. UK 100 is in a similar position. The only situation with the pound, and I'll talk about the pound in general because it obviously relates to the FTSE, the UK 100. So the problem is with the UK, they've got sticky inflation. Now, what that means, we already talked about high inflation, low inflation, or sorry, cooling and rising inflation leading to rate cuts, rate hikes. Sticky inflation means that the central bank doesn't have room to cut or hike, so the real only choice they've got is to hold their rates. So that's not great for the FTSE right now. However, what we are likely to see, or what's the right way of saying this? What I would expect to see is disinflation, which is where we do start to see inflation coming down or cooling off a little bit, which would then likely lead the Bank of England into cutting rates. Now, that's beneficial for the FTSE, and I'll just quickly go over this. I know there's some new people in here, so I just want to make sure you all understand what I'm actually talking about. The reason that rate cuts are beneficial for things like the S&P, the Russell, the FTSE, and the DAX is because, let's say you were buying a house. The higher the rates, the more you're going to have to pay back on your loan. That's the interest rate. And same thing when it's low. Obviously, if you get low interest rates, you're going to be happier, it's less to pay back. It's the same thing with business. If you are looking to expand your business, if you want to do anything involving borrowing money, you want interest rates to be low. So that means when we have low interest rates, there's more optimism, businesses can expand for cheaper. It's generally overall better for businesses. So hopefully that just makes a little bit of sense to some of you. So that's why I keep mentioning the interest rates regarding the equities. Now, the Euro Swiss, we took three trades in Euro Swiss last week. Two were winners, one was a loss. I still think the Euro Swiss long is a great play. Again, the euro isn't necessarily in a super bullish territory, it's not super bearish, but I think it's stable. Now, if we look at the Swiss, let me just pull up the Swiss index. Give me a second here. So the Swiss is not doing much right now, which is fine. But what I would expect long term is the Swiss to start declining in value. Now, we've discussed this heavily, but we've kind of cooled off on this talk just for now. But for anyone that, again, wasn't in the Discord a couple of weeks ago, just to fill you in, the Swiss National Bank has just cut rates, which is actually what, you might have seen the effect on that on things like Swiss yen a couple of days ago. But the idea is that the S&B is likely to go down to neutral rates, which means essentially an interest rate of zero. And it's very possible, the word on the street is that they might go into negative rates, which of course reduces the value of the Swiss, which would increase the carry potential between Euro Swiss. So if we've got higher rates on the euro, lower rates on the Swiss, that means you buy this market, you will get paid to hold. So that's great. I mean, that is already the case. So we have the yield differential in our favor on this one. So it's now a case really of just waiting for this pullback into the fib and possibly the RSI, and then we'll be looking to execute. So very, very simple, very straightforward, very easy trade. And again, we've already sent a signal on this, so feel free to go back and read it. The thesis hasn't changed. Now, just to slightly contradict myself, or not contradict myself, it's not the right word, or a little bit of a contrarian view, I guess you could call it, is pound yen long. Now, just because I'm long-term bullish on the yen, it doesn't mean I can't have a short-term view. So again, due to the sticky inflation in the UK, I think we could potentially benefit from a short-term trade on the pound yen. And this would also diversify our portfolio slightly. So if we're short dollar yen and we took a long on pound yen, one of those positions is going to work out. Very likely, obviously, I can't say for definite or a guarantee, but it does just loosen up our risk a little bit because obviously dollar yen sat in some drawdown. This market's trending up. The moving averages are bullish. It looks fine in my view for a long position on a technical view, and it loosely lines up again with the sticky inflation, Bank of England holding rates. I think it's a fair enough risk to take on this one, so I'm quite happy with that. Um, Dollar CAD is tricky. I've had my eyes on dollar CAD for a while, and I'm not sure that it's something I'm actually willing to take, but it's something interesting, or it's something I just want to pay attention to at least. So we know that we know that Canada and the US are in the middle of a trade war. We know the US is a powerhouse, so it's very, very likely that Canada isn't going to come out of this trade war on top. So if we just look at the dominant position the US is in terms of globally in every category essentially, it just dominates. So to be in a trade war with them isn't something Canada is going to really enjoy in terms of the economy. Now Canada's economy is already very weak. And again, the reason I'm not super happy with this is because the dollar's fallen off a cliff pretty much. So I'm not looking to take a trade, but it's something to pay attention to. We can see the US dollar data pick up and we can see the dollar start to gain some strength. I think we do have potential upside here on dollar CAD, but again, it's not a main focus for me right now. Excuse me. The Australian dollar yen, very simple. Again, the technicals look perfect. This would be feeding into my yen bullish idea. Very straightforward. The Australian dollar is not necessarily in a super strong place. Iron ore has had a little bit of a sell-off recently. Obviously, the Australian economy is very heavily reliant on commodity prices, specifically iron ore. However, their central bank is holding rates, and they seem more neutral to hawkish, to be quite honest with you. So I don't think they're going to be cutting rates anytime soon. at least that's what I got from their speech. It sounds a little bit more like they're pretty much chilling, to be quite honest with you, for a lack of better terms. Okay, let me just have a quick look at this chat and see what I missed. Supply demand EMA RSI but oversold plus fib simple powerful combination. Absolutely is Phantom. I think it's definitely my favorite setup. Uh, the decline may be profit taking. I assume you mean in terms of the metals. Yes, I would agree. Anything on Pound New Zealand? Yes, Phantom. Pound New Zealand's definitely still on the watch list. I'll get to that shortly. Pound Australian. Again, it's not something I'm really too interested in, but if we can see some sort of downside continuation here, I might take a small jab and just see how it goes. But the fundamentals for me just aren't there for this market. I've seen a lot of you actually talking about going short. I do completely understand why you'd be looking for more for a mean reversion. Again, some sort of correction of this side, which is relatively overbought. So I get it. And there is actually some banks, I think, short on pound Australian. Again, we'll go over the bank report, bank trades shortly. But for me, it's just not really there. The Aussie New Zealand actually is my favorite trade. Again, we had a position on Aussie New Zealand last week. Or was it last week or maybe the week before? That was quite nice. I think we took about 1 to 1.5, something along those lines. It was a very, very nice trade. But I still really like the view on this market to continue to the downside. So the RBA cut once but remains hawkish, watching labor market inflation, sorry, labor market and inflation. Fiscal boost expected post-election. China demand recovering is supportive for commodities, supportive of the Australian dollar. However, the RBNZ paused after cutting rates. GDP, retail, and services activity are outperforming. Inflation is sticky. No rate cuts are immediate. Oh, sorry, no rate cuts are imminent. Um, so it's not necessarily leaning either way in terms of central bank policy. However, if we look at the Edge Finder, the Aussie New Zealand is the most bearish reading. The trend is to the downside, and we've got a very perfect setup here. So this isn't just a fib pullback. This is a full break retest of the fib, of the 200 moving average, of previous structure, then a possible continuation to the downside. And again, there is some banks in this position with us. Well, I say with us, we're not in it yet, but there is some banks in this position that do back up this thesis. So I think we are in pretty much set as long as we can see some sort of pullback, which would allow us to get in. We're set to go, really, I think, on that market. The Euro Australian. I like this one a little bit more, but it's in the same position really as pound Australian I just mentioned. The only reason I'm a little bit more interested in this is because it's not come back up to this high. It's quite happily relaxed around this fib. So just from a technical view, I would also be quite happy to just take this one and see if we can get some correction of this side, this left side movement. Again, as far as I'm concerned, the euro is priced in pretty much all the positive news. So I think some sort of a pullback, mean reversion is in order, but again, it's a little bit risky, but it might be worth paying attention to. Australian dollar Swiss, same thing. This is just an edge finder play. This wouldn't be necessarily a hugely macro driven one. Australian dollar Swiss is also very bearish with a -9 reading, just following the short-term momentum, waiting for a fib pullback. Again, very simple, very straightforward trade on that one. Pound New Zealand, also I think is one of my favorite ones. So again, this is a position we took previously last week. It's a very, very simple trade. I think we can get a very similar thing here. So let me just have a quick look here. The pound is supported short term, but will lag as UK disinflation builds. We've already spoken about that. And in New Zealand, again, we did already speak about the New Zealand on Aussie New Zealand, so it's not necessarily weak. However, excuse me, I think following this market in terms of the trend is completely fine. So this would be more of just a trend following momentum play rather than a hugely macro driven play. And you'll see that's sort of a common theme at the moment with a lot of my trades. They're not hugely macro driven. A lot of them are just capitalizing on short-term moves, short-term momentum, and just catching what we can. Um, but yeah, that's pretty much it. So let's have a quick look at these bank trades, just so we can see what's going on here. So we've got Refinitiv is in a, oh sorry, has a buy limit. I'm not sure if this is activated yet. It Yes, I think this buy limit's probably been activated by now. So they're long Australian dollar CAD. They're short on the euro pound, which again, it makes sense. We've discussed euro pound quite frequently in the past. It's a very mean reverting pair. It's not on my watch list at this time, so maybe it will be next week. Euro dollar has a buy limit by Morgan Stanley at 1.065, which again I think is fair, but it seems like they're expecting slightly lower prices. We see a small correction as well. Refinitiv are short on euro dollar, maybe something to keep in mind again if you are looking for that mean reversion move. They're also short on the Aussie US dollar, which is interesting. Uh, Goldman Sachs is short on the Aussie yen, which is what we're looking to take as well. So that's nice. We've got Refinitiv also in a short position on pound dollar. ANZ is short on pound Australian. So again, if you are looking for that mean reversion, maybe that's a confluence for you. Normal Research looks like they've actually just been stopped out of Aussie CAD long, and they are also short on the Australian dollar New Zealand, which is the one I was talking about with obviously the Australian dollar New Zealand trade. But yeah, that's pretty much it. I know this probably hasn't been as informative as normal, but to be quite honest, there's not really any change as far as I'm concerned in the macros. We've covered them week after week. But yeah, nothing's changed. So I'm quite happy to continue following trends, following momentum, following the economics we already have been doing. So if there's any questions, feel free to let me know. I'll give you a couple of minutes to type those out. If not, we can end the stream there. And yeah, we can get on with a trading week, make some money. So this month we are up. Let me actually just double check before I give you a number. So this month we are up 7%. So you can see here, these are all the trades we've taken. So we had a pretty slow start to the month. We started on the 10th, up until the 20th, so that was Friday. Obviously, we had the 1% loss on DAX, but we have 7% return so far this month, I would say, is pretty strong. Oh, hold on, what have I missed here? I couldn't enter silver due to my funded not a swing over weekend. Would it be safe to enter market open? Yeah, sure, and just make sure that the market is relatively close to our execution price. I think you should be fine.
Fuck, you'll say the
Uh,
fuck. I'm sorry, mate. I'm sorry.
just mute all. There we go. Anything? Sorry, hold on. Sunday webinars fire as always. No problem, Tom. Glad you like them. Anything on yen pairs mentioned? Seem to have good setups. Yeah. So Phantom, the thing with the yen at the moment is they seem to not be in a rush to be hiking rates, which is a little bit of a red flag for me. So I'm just not really too bothered about them right now. I think the idea is still there. Again, long term, yeah, long term buy yen. But short term, I think you might be in for a little bit of a bumpy ride until we get to a position where the Bank of Japan is ready to start hiking rates. Again, their inflation is quite high. It's at 4%. Generally, we like to see inflation around 2% as a general target with all central banks. Um, so it's almost double. So again, I'm sure they are going to have to hike rates at some point, but it's just a case of when. Uh, AJ, yeah, looking to short AJ. Again, just following the short-term momentum. We've also got AJ reading bearish on the Edge Finder here. So that's a nice little confluence as well. Again, we've not really heard too much, but I'm happy to follow the market. I just saw the scorecard on dollar Swiss. Bearish view I've set up coming on daily. Phantom, I'll check those in a second. Scorecard on dollar Swiss. Okay, let's have a look. What is scorecard in dollar Swiss here? It's bearish. Yeah, daily does look bearish, and to be honest, I wouldn't mind going short, but do I want to bet against the dollar on a daily time frame? Maybe I do, but that again, that would be a case of waiting for developments inside the data, and at the moment, just don't have a reason to short the dollar heavily on the daily time frame yet. Um, okay. Gold, right. Yeah, gold's in a similar position. So I did buy gold temporarily. I held it for maybe an hour. and then got out because I preferred silver. But it's got the same idea really between the setup. It's not quite met what I would like. I needed to see this 50% pullback really. You could, in theory, have argued this, but to be honest, for me, that was a little bit too aggressive. But yeah, I think the story for gold and silver are completely the same. You know, just be careful around these previous all-time highs. If we can break above, we're chilling. It's going to be gold continues higher. I don't really see any factor for gold cooling off at any time soon anyway. On dollar and EUR, we got massive changes in cut. Paddy, you're right, actually. I forgot to mention that. Let me pull this up. So this is COT positions, tells us what smart money's doing. So they've added positions onto ZAR. Actually, heavily long on ZAR. Maybe I'll have to look at that. I don't trade the ZAR, but maybe something worth paying attention to. Euro has seen a lot of buying interest actually, which does support the euro dollar long idea for the sort of medium long term. We've seen dollar shorts getting added into the market, which again is beneficial. Nikkei shorts, Australian dollar shorts. We've seen New Zealand dollar longs, which again back up that Australian dollar New Zealand position we were discussing. Uh, we've seen some selling on silver, some buying on gold, relatively neutral. The yen stayed pretty much flat. Um, okay, yeah. Nothing overly interesting. However, I pay attention to the ZAR, the euro, the New Zealand dollar, the US dollar, the AUD, and the Nikkei as well. Actually, the Nikkei. Sorry, guys, I completely forgot to talk about the Nikkei, and then we'll probably end it here. So the Japan 225. What I was looking to do was this, when we might still get this entry, depending on how the markets open. So what we've got is the trend change. So we're using the moving averages here. So we've had this crossover, which is loose. It doesn't mean too much, but it does tell us the trend has changed from bullish to bearish. We are respecting this fib, which lines up with previous market structure. So we could get a nice position in here. Again, following the COT, which is indicating short positions getting added into the Nikkei. We've also got the Bank of Japan not hiking rates, which is fine, but you know, if they do start hiking rates this year, it will be quite negative for the Nikkei. We could see price start to come down. How's your experience on the weekly changes on COT? Is it a game changer? Paddy, you can use the COT as a trading strategy. I don't because I don't really like it, but there is a strategy. So what you do is essentially use the COT data like another indicator, as it is obviously an indicator, but you can use it. So when you see a flip on COT, so we've just seen the US dollar net percentage flip from bullish to bearish. We've also just had the euro flip from bearish to bullish. So this could be a sign to start buying euro dollar purely based on COT data. So it's called a cop flip, which obviously you can see up here. That's what the strategy is called. So when you see a flip in COT positioning, you follow that position. Obviously, you'd wait for a setup or you'd wait for something to happen to get into the market, but essentially you'd follow that. Um, but yeah, that's pretty much it. I don't view it as a game changer, but it's definitely worth paying attention to because obviously you don't want to be stuck in a market when the institutions have started selling or they've started going long or they're doing the opposite thing. So it's definitely something to pay attention to, but it's not a huge deal in my view. So guys, I think that's pretty much it. AUD is also weak. Yeah, Paddy, as I said, we're looking at AUD JPY shorts. We're looking at what was it, AUD NZD shorts as well. Is that right? Yeah. Yeah, AUD NZD shorts, AUD JPY shorts, just to hedge off a little bit of risk. We've also got AUD CHF shorts as well. So, guys, as always, these trades will be shared in the Discord as and when I take them. I always tell you when I'm taking a position, unless it's some scalp or something crazy. Um, but yeah, guys, that's been it from me. I don't really have anything else to cover. Again, it's been a little bit lower on the macros this week, just because I'll be honest, I don't have that much to talk about. We've already discussed it last week, and nothing's really changed. I'll be completely honest with you. But again, I will call everything in the Discord. I'll update you as data comes in, as things change, and then we'll have another meeting next week, and we can discuss from there. So, guys, thank you for watching as always. This is recorded, so you can always go back and watch it when you want to. Have a great one. I'll see you all very soon. Thank you for being here.